Welcome to all my viewers to my channel. In this video, I want to teach about characteristics and nature of management accounting. So, as we know that management accounting is a management-oriented subject. It is very much important in an organization. It provides different data to management for taking different decisions after analyzing such data for different purposes. So let us know about characteristics of management accounting. First point, providing accounting information. Management accounting collects data, historical data from financial accounting department. It analyzes such accounting data and supplies to the management, to different levels of management for taking different managerial decisions so as to suit the requirement of our organization. So it supplies, it collects, gathers, analyzes accounting data, and also it applies various techniques to analyze the data for different purposes, and it supplies accounting data, accounting information to management. Second is cause and effect analysis. Cause and effect analysis, let us see. Financial accounting does not do this. It simply determines the profitability condition and financial position of the business. But the management accounting analyzes each and every aspect of financial accounting data and also find out the cause and the effect. Let us see an example. Let us take an example. If the profitability condition or if the net profit of the organization decreases in comparison to previous years, then what is the reason for which the profit of the business decreases? What is the reason? Then it is scanned, the data is being analyzed. If the profit of the organization increases or sales volume of the organization increases in the current year in comparison to previous year, what are the factors for which, what are the reasons for which the sales volume has been increasing? That should be analyzed by the management accounting. Beside this, what are the expenses which have or what are the losses which have negative impact on the profitability condition of the business? That unprofitable activities are analyzed. So accounting data is analyzed to know the cause and effect. Why profit increases, why profit decreases, what are the reason behind it, why sales increases, why expenses increases, what are the reasons, what are the abnormal activities, what are the losses. So that all the activities are being found out after careful analysis. So cause and effect analysis. Use of special techniques. Students, my dear students, under management accounting you can know or you have to study different management accounting techniques, special techniques, just like standard costing, marginal costing, break-even analysis, budgetary control. So how these techniques are applied for the purpose of analyzing the accounting data, each and every aspect of accounting, your profit, sale, fixed cost. So all these things are being analyzed regarding your material, regarding your labor. So different techniques are there standard costing, budgetary control, marginal costing, break-even analysis. So all these techniques are being applied for the purpose of analyzing statistical data to take corrective decisions. So these are use of special techniques. Again, taking important decisions. Important decisions. Management accounting analyzes data from different angles and aspects by applying different techniques, and these techniques are applied in order to know the progress and strength of the business. It also analyzes the data to find out the cause and effect analysis. So it guides the management in taking corrective decision, in taking corrective decisions. For example, the expenses of an organization increases. What is the reason behind it? What is its effect on the profitability condition? What is its effect on the net profit of the business? So that is find out by after careful analysis by the management accounting department. What are the unprofitable activities that we are facing in our organization for which our profitability condition decreases? So that is also analyzed, that is also found out. So after that, important decisions are taken by the management as it guides the management a lot. After careful analysis of each and every aspect of financial accounting. Next one is achieving objective. We have definite objectives. We may have a target, this much amount of profit to be achieved this year, this much amount of sale to be effected this year, this much amount of production to be done this year. So we have the target regarding sale, profit, production, etc. So how these targets can be achieved? How these objectives can be accomplished or achieved? So management accounting collects data relating to previous years. It analyzes each and every aspect regarding sale, regarding profit, regarding production, regarding the factors of production, regarding the expenses, regarding labor, regarding material. All these things are analyzed. Then it also takes different, it also applies different methods and tools. So it guides the management. It enables the management to accomplish the objective regarding sale, regarding profit, regarding production, regarding decrease of, regarding minimization of cost. So, achievement of objectives. No fixed norms followed. If you follow the accounting, if you are going to find out the profitability condition, financial statements of sole trade business or partnership business or company business, then in case of sole trade business and profitability and partnership business, if you are going to find out or determine the profitability condition and finance positions, then we have to follow different accounting concepts and conventions. If the balance sheet and profit and loss statement of company form of business is being prepared, then obviously we have to follow different accounting standards. But there is no specific norms which are being followed in management accounting. Though we have several techniques in order to analyze the data for the purpose of taking corrective actions, corrective decisions, correct decisions, guiding the management in formulating policies, but we do not have specific norms and conditions, just like in financial accounting, like your concepts and conventions, like in preparation of financial statements of company business, your accounting standards which have been devised by Institute of Chartered Accountants of India. But we have certain technique, but there is no specific norms that management accountants should follow while preparing, while analyzing the data, financial data. Then there is no specific norms followed. So increase in efficiency. Increase in efficiency. So what is the lacuna? What is the minus point? What is the drawback? Then that is analyzed. Why the profitability condition of a particular unit, particular segment decreases? What is the reason for which the sale decreases? What is the reason for which the productivity capacity decreases? What is the reason for which the machine is not able to produce more? What is the reason that the salesmen or executives, they cannot achieve the target? What is the reason? So it analyzes, it frames, it enables the management to in framing different policies. It enables the management taking right decision. It applies various techniques, marginal costing, break-even analysis, standard costing, budgetary control. All these techniques are being applied in order to analyze the data, in order to find out the cause and effect analysis. Then it frames different policies. Then it takes different corrective measures. It enables the management in taking different corrective measures in order to develop, increase the efficiency of each person, each segment, etc. This is increase in efficiency. Supplies information and not a decision. Management accounting never takes a decision itself. The decision taking power, the decision taking capacity lies on the levels of management, different levels of management. Major plans and policies are taken by the top level management. It analyzes the data, it collects the data, basing upon historical data prepared by the financial accounting, that it analyzes, it applies different tools and techniques, and it analyzes from different angles and aspects. It find out the cause and effect. It enables, but it helps to find out the strength and weakness. It finds out different factors for which profit decreases, sales decreases. What is the reason behind it? The productivity capacity decreases. So it analyzes, it supplies information to the management. So it supplies information, but it does not take decision itself, because the decision taking capacity lies in the hands of management. So it guides the management in taking a decision. This is decision. Concerned with forecasting. What is forecasting? Forecasting means prediction regarding a particular aspect that to be achieved in the future. Suppose a company has the target, a company is forecasting, but a company has made the forecasting regarding sale of product in a potential market. Suppose a company, LG company, targets to sell AC in the western region of the country. It targets to achieve the sale to the tune of 200 crores. Let us take an example. In the western region, it has the target to sell AC to the tune of 200 crores. So how this is being forecasted? Then the financial statements prepared for the western region. What is the amount of profit? What is the amount of sale? Then that is being analyzed. It also helps to find out different factors for which sale increases. It also finds out different reasons why the sale increases. What type of corrective measures can be taken by the management? It guides the management so that management can take an appropriate decision. So it is concerned with forecasting, prediction in advance, that the expected sale in the month of March, April, May in the western region 200 crores. It is forecasted. So forecasting is done by applying different management accounting techniques. So it guides the management in framing different policies, in taking correct decisions, in taking different precautionary measures. So this is concerned with, it is concerned with the forecasting. Sure, different characteristics of management, providing accounting information. It finds out cause and effect analysis. It uses different special techniques, just like break-even analysis, standard costing, budgetary control, project appraisal. All these things are there. It enables the management in achieving the objective, because objective is set for different department, for different sections, for department output, or for different parts. So next, in case of management accounting, there is no fixed norms as in case of accounting. So the management accountant applies different techniques, and also it applies its own common sense and intelligence to scan the data, to find out the reason, to take correct, to enable the management take a corrective decisions. It increases efficiency. Matlab, it enables the management, and it also analyzes the data, scans the data, to find out the different regions, what is the progress, what is the strength, what is the weakness, what factors are responsible for such weaknesses, what is the amount of loss, why it occurs, what are the factors that has impact on the negative profit of the company. So these are analyzed, and also it enables the management taking different precautionary measures, appropriate methods, appropriate decisions. So it enables the management in increasing the efficiency of each segment, person, section, unit, project, etc. Again, it supplies information and not decision. Management accounting collects information from the accounting department. Basing upon historical data, it analyzes, it scans, it applies different managerial techniques, management accounting techniques. It finds out the cause and effect analysis. So it enables the management taking a decision, but itself it does not take any kind of decision. Again, it is concerned with the forecasting. That I have already told, forecasting means prediction in advance. For example, I have put an example, let us take an example. Tata company is expected to earn profit 500 crores in the year 2022. 5,000 crores of profit it is expecting 5,000 crores of profit in India. So this is forecasting. Past results are being analyzed, past performance is being analyzed, past financial statements are being analyzed, that is collected from financial accounting data. So it is basing upon historical data, then it analyzes and also forecasts, to achieve a particular object. What is the amount of sale, whether the amount of 5,000 crores of profit to be achieved or not by the Tata company. So it is being forecasted. So it is concerned with the forecasting. It is concerned with forecasting. So these are the management characteristics of management accounting. I hope my dear students will gain a lot of knowledge. Then in the next video, then I'm going to discuss about scope of management accounting. Thank you, my dear students.